Welcome, everybody, to the Chinchilla Pickin' Podcast. It is November the 5th, 2023. And as always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the Baron of Bonds himself, Brandon Beaver. How are you?
Great. How about you?
I'm doing well. Remember, the 5th of November. It is Guy Fawkes Day if you're in Great Britain right now. You are burning effigies of Guy Fawkes and shooting off fireworks and shouting God save the king and all that. It's kind of celebrated differently in America. We kind of put our own little twist on it, but it's interesting, these holidays. Like I know there's a town here in Cincinnati, Ohio, Montgomery, that celebrates Bastille Day. They have a Bastille Day festival every year around that time. So it's weird how we have these holidays that we celebrate here in America that are actually other countries' holidays, you know?
Well, we're all immigrants from somewhere.
Yeah, that's true. And that kind of adds to it, right? I mean, Cinco de Mayo, we celebrate that. And, you know, that's just a different holiday. And none of these are actual independence of these countries. Like Guy Fawkes Day is not British independence, you know? Bastille Day is not really French independence. I mean, we celebrate these holidays, but not the other bigger ones. Oh, well.
Yeah.
It is what it is, right?
Right.
Earnings. It was a busy week for earnings. It was a busy week for news. There's a million things we could be talking about right now from this past week. There was another regional bank failure that I posted about in our group chat. You have Mark Zuckerberg tearing his ACL. I mean, come on. Where can we go with all this big news here? We have so much we could have chose, but we were very selective about what we did choose, and we hope it's good for you listeners. We hope you guys enjoy the show we have for you. Brandon and I broke our rules, our only rules that we have, and we actually told each other via text kind of what we were going to talk about well ahead of time, not 5 minutes before the show. So we had more time to actually study up on the other person's points of what they were going to cover, and I did not actually take advantage of that. I did not look up what you told me you were going to cover. So this is going to be off top of my head. This shows my I don't know if it's my laziness or tiredness or what, but there you go. That is what it is. But I did have a lot that I have on my plate. But as always, Brandon, I'm going to leave it up to you to lead off the show, sir.
All right. So I'm going to give you a surprising statistic real quick. If you look at forward projected earnings over the next 12 months, Apple is trading at 27 times projected earnings, almost exactly the same as NVIDIA for projected earnings, almost exactly the same. Only one of those companies is growing right now, and it's NVIDIA. It's not Apple.
That is very shocking. That is very shocking. 27 times projected earnings.
Yep.
And well, yeah. And I think NVIDIA actually needs to grow faster than that in order to keep up with their share price.
Yeah, I think so. But with 27 times projected earnings, valuation in that sense is in line.
Really? Okay. Yeah. So Apple's the one not hitting the mark here. Okay.
Right.
So I mean, it's hard to grow when you're like the third largest company in the world. I mean,
well, they're the largest by valuation and market cap.
Right. So I mean, it's yeah. I mean, how much further are you looking for them to grow here at this point?
In the latest quarter, Apple recorded revenue of $89.5 billion, very large stack of cash, down 1% from last year. For the fiscal quarter or for fiscal year that ended in September, Apple's revenue fell 3%, declining $9 billion from fiscal 2022. That marked its fourth consecutive quarter of declines. So let's compare this with other big tech companies. Apple's latest results are in contrast with the other big tech giants. So in the September quarter, Tesla's revenue was up 9%. Alphabet grew 11%. Microsoft and Amazon both expanded 13%. And Meta, my favorite, increased 23%. NVIDIA blew away estimates, 88% growth in its latest quarter. So Apple Apple not
Good to know.
measuring up so far for this year. And according to the Wall Street Journal, over the same 4 quarters, Microsoft expanded its top line by more than $15 billion. Apple reported full year declines in all 4 of its major device categories: iPhones, Macs, iPads, and wearables. Only services revenue grew from the previous year. So, what do they have to do to get this jump started? You know, Apple never really discloses its or makes it official what its next investment's going to be until it's Apple event days and such like that. So we don't really know what they're working on, but something's got to get this company moving if it's gonna justify its current stock price. Go ahead, Dave.
All right. Yeah, I agree with that. But maybe, and I did not hear the earnings call, so I don't know if this is true. This is where their vision is to go, but maybe Apple's looking to. Yes, they're still a device company. That's still how they make money, is selling devices, but they're wanting to focus more on the services, the subscriptions, the Apple TVs, the Apple Music, the Apple, all those other things. Apple Podcasts by Adam Chinchilla picking podcasts. They're wanting to grow, right? They're wanting to grow in all these other areas, and so they're not as focused right now on devices because they already have a large swath of the population that have their devices that eventually they'll have to upgrade at some point. But right now people are not looking for those discretionary purchases because they can hold on to the device, it's still working, and they want to take advantage of all these other services.
Right. I agree with that. And I also think prices are too high. When you're running at a 45% gross margin, but you're losing market share, you've got a chance there to decrease your prices on Macs in particular, which we don't know the specifics on the gross margin of Macs by itself because it's not really reported. But I think that's somewhere between 25 and 35%, somewhere around there. So if it's on the lower end, maybe not so much. But if you're up there towards the 35% on some of those Macs, maybe bring down that price a little bit to stop the bleeding of your market share in a time where high inflation is running rampant. Still to this day, I mean, yeah, we're only talking about 3%, 4% growth in inflation at this moment in time, but you're adding that on top of the 8 to 9% that we had last year over year. People are feeling the pinch. If they're going to buy, if they're going to buy laptops right now, they're buying PCs because the cost makes more sense for it. Maybe Apple needs to bring those prices down. Now,
yeah, and I 100% agree with that. And Apple does have some margin there to give. Now, here's the thing you have to look at from Apple's. Again, I did not hear the earnings call, so I don't know why I'm defending Apple here. But I look at it like, Tesla was in the same situation. They had this huge profit margin, and these other companies are coming in, Rivian and so forth, and Tesla's like, all right, we're just gonna cut our prices and undercut you guys, and we're still gonna be profitable, and you can't compete.
yeah.
I think the reason why Apple doesn't want to do that is Apple has this image, and they want to keep we're the upper class, the higher end models, whereas they could cut their costs and they could cut their products and make it less expensive and be in that market. But I think they want to keep that, we're of the upper echelon elite phones here.
The name, yeah, okay, so they're a luxury of tech.
Yeah, right.
Yeah. Okay. So if you're thinking that the holiday quarter might actually, buck the trend here and change things, it doesn't actually look like it's going to. The holiday quarter, they're estimating that that quarter will be flat year over year. So not much growth there. Now, I will say this, for the past few years, we had a huge influx in buying of PCs and Macs. So that could be a part of it. But let's look at the numbers here. If you look at the hardware categories, they sagged with declines of 3% in wearables, 10% for iPads, 34% for Macs. And PC shipments altogether, they were down only 9% in the same year. So looking at PCs versus Macs, 34% decline versus PCs, a 9% decline. They're losing market share.
They are losing market share, and you have Google coming on strong in the hardware division because and I think that's I mean it's a good move for Google, but I think that has something to do with it. The Pixel, I've seen a lot more advertising for the Google Pixel and its new features. So I think a lot of people are navigating over to Google Pixel as an alternative rather than just Samsung Galaxies.
Yeah. So I don't have the retail price for this, but I know that the lowest price MacBook Air cost Apple $718 to manufacture. So I'm thinking that's probably around like $1,000, 1,100. So they got a little bit of a room.
Well, I mean, here's the thing too: is when you look at people who are going to be buying PCs, you're going to look at what college students. Because if you work for a company, the company is usually going to buy you your own PC or laptop. They'll provide you with one. So you're looking at college students, right? And then you're also looking at people who actively use laptops or computers, and those are typically gamers. Gamers are going to buy PCs over Apple every day of the week, just because of the processing and the drives and everything else, and they can expand it and and make it their own. They're not confined to the Apple stratosphere here. So when I look at that, there's no surprise that Apple's losing steam here, because when I look in my own personal life, and maybe it's just the people I attract, more and more people are quote unquote gamers and PC gamers, and there was a rise with Fortnite a few years back that really pushed a big rise in PC gaming, and that's what really set off the video off the charts, and then you continuing to see that. I think that has some to do with this, but I think it's also college, like you said, college kids going back to school, and they could get a Chromebook versus a Mac a lot cheaper than, and they're trying to save money because tuition rates have gone up.
Yeah. And it is that luxury brand, but look, overall gross margin for the entire company was a record at 45.1%.
That's a big gross margin. What's the net margin though? What's net? Do you know?
Huh? I don't know. I don't know the net off the top of my head. No, I just looked at the gross margin. Yeah. So 45.1%, though, it does seem like they've got a little bit of room there to cut some prices if they need to.
Yeah, that's gross. I mean, we don't know what it is. I mean, that sounds like it's EBITDA. So I mean, what are they paying off here? What are their taxes? What is their interest they're making payments on? I would love to have one of those corporate bonds, because I'm sure they're always paying on it. But you're probably not going to get a good rate.
Yeah, it's not. I don't know. Here's the thing, though, about Apple: they've got good management. He's produced growth so far with the AirPods. Not so much with the headset so far, but we're still early in that.
They don't have it. No, so the headsets. All right, now you're talking the field I know a lot about. All right, now you're in my area here, Brandon. You tiptoed over. You came over into VR here, and so in AR, augmented reality and virtual reality. All right, so you dipped your toe in. I'm going to take it over. Apple has not released anything yet that is more for consumers. They have released things for developers. They have released things for business related purposes. Nothing really out there for consumers. Whereas Meta has just made their new Meta Quest available to be purchased. So that is now you could go on and purchase their new headset. And so Meta already has, this is like the third Quest headset. They had like they had three different versions of their original Rift that needed to be plugged into a computer to run, and now this is the third version of their wireless, no computer needed headset. So this is really going, and they have a good game with Asgard's Wrath 2 that's really going to drive a lot of the gamers in there, and especially with the NFL right now, the NFL Pro Era game, where you can play against your friends. So Brandon, you could get on there and you could be the Cowboys, and I could get on there and be the Chargers and beat you in VR football. So that's something that Meta's really pushing there.
So the headset's not due to release until early 2024, which I should have looked that up earlier. But generally speaking, if they have an event based on something, it's within a couple of weeks of the event.
Well, they release it to developers. So they release it to like EA or, Interactive and all these other companies, so that they can develop products and games and systems for it. Unreal Engine, they make a lot of the VR software and games. Believe it or not, they are very involved with them.
Incredible,
Yeah.
incredible technology.
Yeah, so I mean, Apple's releasing it to those type of individuals. I bet you, because I own a company, I could probably get one of these headsets, but I have no interest in it right now because I want to see what kind of a lineup of apps and games can they perform with it.
It looks to me like it's going to be more kind of like the Mac and the iPhone, where it's going to be kind of like more of an everyday use and maybe not so much for gamers. You could do the same thing on this headset that you can on Meta as far as expand the screen of your TV and play Xbox or PlayStation games on it. With your PlayStation 5 or Xbox, whatever the new Xbox X, I think it is, whatever. Um, so you could do that on there, but I don't think it's going to be as big into gaming as much as it will be into like watching movies and things like that.
Yeah, that's basically just playing your console games with a different via headset. That's all it is. You still have the console controllers. You're doing it the same way. You're not actually in the game, living the game like right now you have with a lot of the VR sets.
A lot was made over over Apple's China revenue over the quarter, which was down 2%. But really, if you dig into the numbers, you'll see that was really only currency headwinds. So if currency would have stayed equal year over year, they would have actually been up 4%.
Well, I
So
mean, so you have that, and you also have the fact that Foxconn blew out their earnings, and this is one of Apple's biggest suppliers. So when I look at Foxconn having a great quarter, great earnings, and they're doing wonderful, and that company's looking to shoot up out of the charts. That tells me that they're making the products for Apple just fine, as Apple's not selling them.
well, it's not just Apple that they service.
Yeah,
They also service Microsoft and such, and maybe those other companies are just doing a lot better right now.
yeah, and that I realized that after I said that,
Yeah.
after I already opened my mouth, I was like, oh no.
And the other possibility for growth here, people talk about AI, Apple lagging and AI, but what you don't know is behind the scenes. Apple never really, like I said, announces things until they're already developed, until they're about to hit the consumer. So the headset was kind of bucking the trend for Apple as far as this goes. But usually you get a new iPhone, just a week or two after the event. But they never really confirm anything. But Tim Cook did say on the conference call, in terms of generative AI, obviously we have work going on. I'm not going to get into the details about what it is because we don't really do that. But you can bet that we're investing quite a bit. And you will see product advancements over time where those technologies are at the heart of them. So they are looking into generative AI. There could be something in Apple's pipeline here coming out within the next year that we just don't know about yet. And these business battles where one falls behind and then one takes the lead, if they've got good leadership, I believe Apple does. They've got good leadership. They almost never end. So, it very well could be that a year from now, Apple's back in the lead again, and Apple's got a growth project that's come out. And, they're very, very, very motivated against each other. So Apple's looking at Meta and probably jealous of the revenue growth and trying to figure out ways to catch up in that area. And they're probably looking at AI and trying to figure out ways to catch up with Microsoft and Google and Meta as well in that area too. So it really wouldn't surprise me to see Apple take the lead again within the next 12 months. This is why I'm saying you don't sell the stock. They may have hit a stagnant period, a weak period, but I think they're going to come out of it.
I own them. I own Apple. But right now, we're going to find out in one of the articles I'm going to go over later on that there is a company that just came out with AI that is now the most fastest and bestest and shiniest one out there. And they just got released this past week. So, it changes all the time who's the leader, and it's going to continue to change.
I think it's a symptom of the business cycle. I think it's inflation, people feeling the pinch, not wanting to pay up for Apple products like the MacBook or even the iPhone at this point in time. And I think that's what's weighing on them.
Right. I don't want to.
And it's not just the United States. The United States economy's been doing better than the rest of the world, at least in the Northern Hemisphere.
Yeah.
So, if you're looking at their China revenue and stuff, China's had problems in the past 12 months, much worse problems than us, and so is Europe.
Yeah, I mean, the United States is actually of all the high inflation and everything that could have happened to all the economies, we are so far handling it the best. Everybody's still expecting a drop sooner or later, especially with the last jobs report and coming in that unemployment ticked higher, jobs coming in weaker. Some people are saying it's due to strikes, not doing the strikes. GDP still not where it's at. There's a lot of numbers pointing to that. Everybody's calling for that. So, it could happen soon. But I think I'm curious. Did you see any numbers on the Apple credit card, the one I've been very critical of for a year now?
Not yet.
All right, because that's what I'm
I'll take a
curious
look
on.
at it. Yeah.
I have been so
So
critical on it. Even Goldman Sachs. I covered this in a previous episode where Goldman Sachs came out and they just like we're losing money on this Apple deal. We've lost millions and millions of dollars on this. This credit card is just not paying off. And it's because they went for subprime borrowers.
I want to talk about credit cards real quick because 3 in 5 Americans, this is 61%, are in credit card debt, owing an average of $5,875 in credit card debt right now. That's the average. Okay. 23% say they go deeper into credit card debt every month, and 14% say they've missed a payment in 2023.
Wow, I did not that. So the going deeper part is what scares me.
Yeah.
And the fact that they've missed the payment, like you can't get your finances under control, that you have to continue to go deeper and deeper and deeper in debt. Wow.
Yeah. 28% of Americans believe it will take 5 years to pay off their credit card debt.
Wow. Really?
Nearly half of Americans need credit cards to cover essential living expenses.
Yeah, I knew that one. I knew that stat. That's been shoved all over the media.
59% of millennials, which is crazy to me because it was just a couple of years ago where we were doing studies and finding that millennials had no credit card debt because we grew up dealing with a Great Recession. Many Americans have missed at least one credit card payment. 43% have missed at least one in the past 5 years. The average American spends $1,506 on their credit card every month. That's average.
See, I'm not too concerned about that because a lot of Americans, and myself included, will use a credit card as a barrier between companies that we're not too confident in and our bank accounts. So will you put it on the credit card and we'll just pay off the credit card right away via our bank accounts? That way there's that barrier of protection there.
29% say they max out their credit cards every month.
Wow. A third of people max them out every single month.
Yeah, and 40% say they've been in credit card debt for more than 5 years.
I mean, it's okay to have credit card debt. I'm not,
It is.
again, it's okay to have some debt and have something on the credit card because it depends on how you use it
Yeah.
and what it's used for. Like, there are people I know, friends of mine and myself included, that will use our credit card at gas stations and everything else because we don't trust the swiping system. And we use it for that, and then we just pay it off every time.
Yeah, and that's not a bad thing, and it ups your credit. Now, I have had zero credit cards for probably about 6 years now. And that's not bragging. I mean, it could be looked at as a good thing or a bad thing because I'm using my mortgage to build my credit score, which is a good thing to do. And I haven't missed a mortgage payment or anything like that. But I just don't care for credit cards. If I can't pay for it with the cash that I have, then I don't want to own it. You know what I mean?
To me, it's a barrier. I could just claim anything on a credit card and say, "Hey, that's not mine. That's not my purchase."
Yeah,
and they automatically take it off.
that's true.
It's a barrier. It protects my bank account, so I don't have to use my debit card at a gas pump. I don't know if that gas pump's been hacked and someone's getting all the information. I could use my credit card.
Yeah, we've debated recently about getting a credit card, but I don't think it's a good time to do it right now with rates being as high as they are. Even
Oh, dude, if you don't have one, you're gonna get like a 20% interest rate.
Yeah,
Your credit score is not awesome. So
ridiculous. I was really surprised when I was looking at that the other day about the millennial credit card debt because our generation was actually better at credit card debt for many years than other generations because we grew up and we saw the effects of 2007 and 2008 and 2009.
So yeah, and this goes back to something I've griped about on this show here many times. It's people trying to live in the moment. We have to get this right now. We have to get this right now, and they're not thinking forward. They're not planning forward. They're not living within their means and budgeting correctly. And so and this is something I mentor people on constantly, Brandon, constantly, is like you have to live within your means now. That way, when you get that extra money, you can invest it, use it as capital for growing your assets, because your assets are going to give you income. Grow your assets. They provide you income. You always have income coming in. Then now you're making money when you sleep. I gave the example, and I'll give this example again. This is a true story. Gentleman was talking to me one day, and he was telling me about his tax return is coming in. It's about $10,000. And in the middle of the conversation, I stopped him. I said, "Tell you what, man, if I offered you a way to make $500 a month for the rest of your life, or $10,000 right now, what would you do?" "I'll take the 500. Duh. Come on now. I'm not stupid." I said, "Okay. I said, then why don't you take that $10,000 and let's invest it? And I'll tell you exactly how to invest it for the first few months." You know what he did? He said, "I can't. I already spent that, even though it hasn't come in yet. I've already planned on spending it on this." And it was all discretionary things he could have waited on. It was all things he could have one of them was paying off a credit card, a smaller one. I'm like, you could have still just made the minimum payments on that and used the income that you created from your investments to pay the minimum payments on that.
Right.
You know what I mean? Like, the vision of Americans is not the mindset towards money is not in the right set. It's not in the right place. And this is what causes millennials to be at 30% of them saying that they're using their credit cards to pay their groceries and gas and everything. I don't know, man. That's my soapbox for today.
I don't have the statistics on it, but rich people are immune from this. They're actually taking loans out against their stocks to make purchases and buy houses and cars and such with that, which is even crazy.
It's because you're taxed differently on the loans.
They are.
Is the reason why you're taxed differently on the loans. You actually aren't taxed at all on it because it's not income. It's a loan. And then you pay it back off over time. And if you get a 0% interest rate, then boom, you're using money that you're not being taxed on to go ahead and invest in assets. I mean, it's a smart way to do things.
If you do it right. But how many times in the past where we've had market corrections or crashes have we seen margin calls on even the rich?
Yes, margin calls happen, and if you don't have the money to back up those margin calls, then that's on you for taking that risk. You should know better, especially if you're at that point in life where you're able to take out loans against your stocks. But I will put this out there for anybody listening right now. If you want to be someone that I work with and mentor privately, DM us. Brandon and I can set up times to work with you, help you out with your finances. And this is what I do. I do for a lot of people. Right now, I'm doing it free. So you might as well get in now, because who knows? I might start charging here in the next few years. But right now, I help out people for free in my own time. So, DM us, let us know. We'll sit down and see what we can do for you. But yeah, it's just another way to do that, Brandon. That's why they do that.
Yeah. It's not about
what else you got?
Like I said, if you're responsible, but then if you have to go and indiscriminately sell Apple and Amazon and Microsoft, I guess it creates opportunities for guys like me and Dave.
Right.
And scoop them up.
There you go.
That's
what
all
else you got, man? That's all you got? All right. All right, let's move right into my articles, because I love the article section of our show. I don't know why I'm so excited about article section. I think it's because I don't tell you what they are. So you are literally hearing it right as I say it, and then I get your honest feeling about it, and we talk about it. Sometimes it's a minute. Go ahead.
I like it too, because it's challenging.
Right? Sometimes we talk about it for 30 seconds. Sometimes we talk about it for 5 minutes. Here we go. First one. Headline reads, South Korea to reimpose stock short selling ban through June to level the playing field. This was released by Jack Kim on the Reuters line at 3:40 a.m. this morning. And basically, I'm going to read some of this just to give you an idea of what it's talking about. South Korea, from Monday, starting Monday, they'll reimpose a ban on short selling of shares at least until June to promote a level playing field for retail and institutional investors. The ban was lifted in May of 2021 for trades involving the shares of companies with large market capitalization included in the KOSPI 200 and the KOSDAQ 150 share price. Basically, Short selling, for those of you who don't know, it's when we go ahead and sell a stock. So we're basically borrowing shares of the company. I'll sell ABC company, but then when I go to buy it, I buy it back at a lower price because I believe that company is going to go down, right?
When you
And
buy
also,
it back, you create a floor for
exactly,
the
there you
stock.
go.
Yeah.
Yes. Um, so amid continued uncertainty in the financial markets, major foreign investment banks have been engaged as a matter of practice in unfair trades, and we determined that it'd be impossible to maintain fair trade and discipline. That's what Kim said. So early in the year, the regulatory fined 5 foreign firms, including Credit Suisse, for naked short selling. Initial thoughts, Brandon? Good thing, bad thing, not
No,
indifferent?
you know what? I don't mind the finding for naked short selling. If you don't have the collateral to back it up, then you probably shouldn't be doing it. And Credit Suisse is just a terrible company lately, anyways. Over the past couple of years, they probably were being irresponsible. Um,
Yes, they
I,
were.
I love South Korea. I've been there before. I spent a lot of time in Seoul back in 2008, 2009. One of the coolest places I've ever been, but it is a dumb regulation to just put a blanket ban on it. You know, the idea is that you're kind of you're creating an area. They said level playing field, but really what they're probably trying to do is level out volatility in their stock market. But volatility creates opportunities for guys like me and you. And beyond that, it also short selling because they wind up buying back. Um, it creates a floor in the stock. If the stock is going down, then when they buy it back, it creates a floor in it. And then if they're wrong, then the stock goes up because then you got the short sale that didn't go right. People are having to buy back their shorts in order to cover, and the stock goes up because of that. So I just think it's a bad idea. I think it's a bad idea. I think what you're actually doing when it comes down to it, if people start panic selling and the short sellers aren't able to step in and buy back that stock to cover and make the money back, then you're actually probably eroding some of the floor that's currently in the market.
That's a very good explanation. Very good. Very surprised. You just boom. This is how smart Brandon is, guys. All right, yeah. So I don't like it either. I understand the reasoning behind it. I understand why they want to do it. I say just continue to find the companies that are coming in here doing this naked short selling. Find them, make sure they're being punished for that because it's against the law there, so it should be illegal. And so that do that, but don't. I'm against the government coming in and banning certain things when let them do it. They want to do it. That's their choice.
One of the things I didn't like going into 2008, 2009 was that a lot of the short selling could be done in black markets where you actually did not have your name necessarily tied to it. They didn't ask any questions about who's actually doing these short sells. And a lot of people, shorted the market and going into that, there was a lot of I think manipulation too by short sellers that could come out and spread lies and spread rumors, and you would have no idea that they had shorts on the stock. So that I don't care for. That I don't like. If you want to heavily regulate that area of it to where who's doing the short selling has to have their name out there that they're doing it, that it has to be on their balance sheet and it has to be proven that it's them doing it, then that's great. That's fine. I'm cool with it. But to out and outright ban it's just goofy.
Right. And, it's funny you mentioned that about using the media and, spreading lies and all that. Jim Cramer, there's a video out there on YouTube of him admitting that hedge fund managers do this.
Yeah.
And he explains how they do that. And it's out there in the world. You could Google this and find it.
It's on one of our earlier episodes.
Yeah, there you go. Yeah.
Podcast. Yeah.
Yeah. And so this is real stuff that people do that what Brandon's talking about. This is what big companies, hedge funds do all the time.
Yeah. And Kramer would often target Apple. He talked about this all the time. He used to do it. He admitted to doing it. He would target Apple because Apple never talks about anything until they officially announce it a couple of weeks later. And they will never comment on anything any short sellers have to say or any negative rumors or anything like that. They don't play those games. And so they were an easy target, prior to the iPhone being released.
Yep. Very easy target. All right, man. You ready for the next one?
Yeah.
All right. Next one is Elliott Management sues the United States SEC for records on swap rules. This is by a couple different authors on the Reuters Newswire at 5:23 p.m. on Friday. So basically, it's going to go in there. Elliott Management, it's one of the world's biggest hedge fund firms. They're suing the United States Securities and Exchange Commission to obtain information about rule proposals that could affect how activist firms like Elliott do business. Basically, some of the rule changes that activist firms don't like is, so last month, the SEC said it would give activist hedge funds and other investors just 5 business days, down from 10 days, to reveal when they bought more than a 5% stake of a company's stock. They strengthened these rules intended to prevent anyone in the security-based swap market from manipulating prices. So Elliott's an activist investor. They come in, they buy up shares, they make changes to the company, and then they sell off and they hopefully make money. That's their goal. But Elliott has filed to go ahead and get the information as to why you're making these changes, who's coming up with these changes, and where everything is going. And the SEC is not really responding to this right now, and Elliott's getting frustrated with them. Thoughts, Brandon?
It's only swap companies like credit. Is it credit default swaps, such and stuff like that?
So in the article, it's talking about large security-based swap positions.
Yeah. Okay. So the other company,
because Elliott will come in and they'll use swaps in order so that everyone doesn't know that Elliott Management's buying up all these shares all at once. So it allows Elliott Management, like swaps, to go ahead and buy up these shares without really their name being out there. That's the thought behind it.
I mean, I like the idea of making them disclose. I just don't know really what it accomplishes and like what the purpose behind it is. What other than what you just said there, but what's the benefit of that?
If a company's going to buy up more than 5 or 10% of a company, then typically they're going to be an activist investor or try to buy out the company, and so it's going to send the shares higher. And companies try to avoid that. So that's why they try to quietly buy up shares. Now, here's the thing. LA Management's suing the SEC saying, hey, you can't, why are you doing this? Tell us who put this rule in place. They're asking for information, and the SEC's they're not giving the information. So that's why Elliott had to sue. So it's kind of interesting that they have to sue the government because the government's not releasing the information that they promised they would.
Okay. So I think we probably need a little bit more information on that. What's the rule for regular companies that aren't into swaps? I think it's 9%, right? Like if Berkshire bought up more than 9% of Occidental, then they had to disclose it.
Yeah, that's correct. And this all became very big news back in the day when Elon Musk was buying up Twitter shares. That's when everybody started to become an expert on how many percentage and shares and all that.
Yeah. I think the more transparency we have in the balance sheets of the companies we own, the better off we are. But I would just have to wait to see like who put the rule in place and for what reason to really like develop a overall opinion about it. You know what I mean?
Right, and that's what Elliott Management is trying to find out.
Now, oftentimes, if a company goes in and tries to do a takeover, if they're trying to buy up shares, it might be beneficial for the company that's getting bought, that's trying to stave off, the hostile takeover, for the shareholders to not know.
Yeah. I mean, it's good to have some transparency there, but at the same point, I'm like, when do we let the markets just do their thing?
Yeah.
Where's that balance at? All right, man. Moving forward, the next one. You ready?
Yeah.
Headline reads: Elon Musk debuts Grok, AI bot to rival ChatGPT and others. This was published today at 11:30 a.m. Updated 44 minutes ago by Rebecca Picciotto. I'm sure I'm messing that up. I apologize, Rebecca. So Elon Musk released his AI bot on X, and basically Grok, the company said, is modeled on the Hitchhiker's Guide to the Galaxy. So it's supposed to have a bit of wit, a rebellious streak, and it should answer the spicy questions. So Musk released this on X. Basically, he's saying that example of Grok versus typical GPT, where Grok has current information, but others don't because it utilizes X as a way to get the most up-to-date information. it goes on in the article here is if you're going to be an X premium, it's going to come with it, so you don't have to worry. You just get Grok with it. But what it goes on to say, it's going to it goes on to outperform all the other models in the computing class. Basically, all in middle school math problems, it beat all the other ones. I'm trying to read here and talk at the same time. uh, the computer self-stated mandate is to build artificial intelligence to advance our collective understanding of the universe. And so he's moving us out on X. What do you think about this? And it's meant to be faster and better than ChatGPT in a lot of areas.
So this doesn't surprise me. I didn't. It's one of the reasons why I love this news part is I missed this. I didn't see this at all, but it doesn't surprise me. Elon was one of the early investors in OpenAI, and when OpenAI was having difficulties and they were a nonprofit, and they weren't moving as fast as he had pledged $1 billion to them, but he showed up at their office and said, "Hey, I'm not going to give you this $1 billion unless you let me take over the company." And they didn't let him do it. So he was trying to take over OpenAI, and he walked out with his money. So it doesn't surprise me that he's developing something else. If it's using Twitter as its input for information, I'm a little bit concerned.
As an input for information.
Okay,
not
good.
That's the good. Input.
Little worried about fake news and such with that, but it'll be interesting to see how that develops and how far it pushes Twitter.
Right. I think X is it's gonna be a big proponent for them, especially if it's given to the premium plus one memberships, the ones you don't get any ads. And now you could get your AI robot as well to help you out on whatever you need help on.
Yeah. And can they implement it into Tesla?
Well, they are going to have AI in the Tesla. I've talked about it, and they're using AI in the AV and EV on the previous shows, Brandon. If you were listening, they're doing it to develop the AV autonomous vehicle driving systems at a significant reduction. It's like a 90% reduction in cost of developing them by using AI instead. And so doing that, it's driving down the cost of Tesla. And so it's going to continue to make them competitive.
Okay.
But yeah, I just thought I'd put that out there for people to know, like, what's going on. Is anybody else doing AI besides ChatGPT and all that?
Well, they have to, because if you're going to, fight graphic images, child pornography, such and things like that, you have to have AI that detects it before it even gets posted.
Right. And instead of hiring like 1,000 moderators, you can use AI and you won't need 1,000 moderators.
Right. Exactly.
Saves the company money. All right. So I want to get in here. I want to talk about
and not just that, but like Al Qaeda videos, ISIS, and all of that as well. Yeah. Okay. Now I'm good.
There you go. All right. I want to talk about Roku for about 2-3 minutes, and then we can start to wrap it up here. But Roku released their third quarter earnings results out, and they took a huge jump up, and I'm kind of surprised. So the numbers were a little different, right?
Yeah.
Their third quarter revenue increased 20% year over year. So it was up to 912 million, beat the consensus of 855 million, right?
Right.
But they still reported a quarterly loss of $2.33 per share versus a loss of 88 cents per share in the year prior. Their adjusted EBITDA was 43 million positive, so they're saying they have positive cash flow. Now you say, okay, well, did they add accounts? Well, they did add 2.3 million accounts from second quarter to this quarter, right? 2.3 million accounts is a good amount of accounts, right? Streaming hours in the third quarter totaled 26 billion streaming hours. Average revenue per user came in at $41.03, but that's down 7% year over year. So they added users, but they're down in how much revenue each user is bringing in. In addition to cost reductions, measures were announced in September to further reduce the year over year growth rate and enable to deliver positive adjusted EBITDA. they want to focus on keeping a positive adjusted EBITDA for the full year 2024 with continued improvements after that is what it's saying here. I I go in here and I read all these different things, and I have this other things up where their earnings are actually continuing to get worse. They are still not making profit, but they say it's because ad revenue has grown. But then I look in all these numbers and I don't see the ad revenue they're talking about. So I don't know if I'm just missing it or what. But again, next year we should have a good year for ad revenue because of all the political ads we're going to have coming in. There's going to be billions and billions and billions of dollars being spent on political ads. But I mean, I see too many companies, Brandon. This concerns me, trying to base their whole financial structure off of ad revenue right now. Netflix, you have Apple, you have Hulu, you have all these companies saying we're going to make it off of ads. We're going to make it off of ads. Like, is there that many people trying to market their product out there that they have enough money to spend on all these ads?
Roku hasn't innovated anything since it originally came out. I have the same Roku in my bedroom that I had 10 years ago because there's been absolutely no reason for me to buy any new hardware from them. And on top of that, there's new competition. So I used to have Roku in the living room and in the bedroom, but now I've just got it in the bedroom because I don't have my Xbox or my PlayStation 5 in there.
Well, Roku will say they're not a hardware company. They sell hardware so that you get driven to their software, to their services, to their streaming services, to their subscription models. That's where their hardware drives you to, and that's what they're going to say.
But that doesn't make any sense because if I've got other hardware like an Xbox or a PlayStation, then those apps are just generally, those streaming apps of Disney Plus and stuff like that, they're directly on there. You might buy a Roku TV, but that's hardware driven again.
So I have a Roku TV, by the way. And they have a Roku channel, and they have Roku streaming services, and they have Fandango on their Vudu. And I'm sure that Roku gets a slice of that every time I purchase a movie on Vudu.
Yeah.
So there are ways that they're making money, but again, they're not profitable. They do have a positive cash flow, but you're going to be dependent upon ads in order to get profitable. And this is another company dependent upon ads to get profitable. And I remind you of Instacart. Instacart's dependent upon ads to get profitable. So that means I'm in the wrong line of business. I need to be in marketing because everybody's dependent upon ads nowadays. We should be having a marketing company, Brandon.
Right, we should.
This is ridiculous. I don't know.
I'm
not buying into the hype on Roku right now.
I'm not either.
I'm very hesitant on it. I would say I would be wary, and I would caution anybody trying to jump in right now after that huge jump they had.
If they weren't profitable back in 2020 during COVID, then how they missed their opportunity. When's it going to happen?
Right. Exactly. So the last thing I'm going to mention here is I'm just going to mention one quick thing on Berkshire Hathaway. They had a quarterly net loss, right? And I want to pull out one statistic. I gave you the statistic before we started the show, Brandon, but I want to repeat it for everyone listening. 78% of the aggregate fair value of its equity investments was concentrated in American Express, Apple, Bank of America, Chevron, and Coca-Cola as of September 30th. Do you think this is Apple, or what do you think is causing Berkshire Hathaway to take a loss right here, even though they spent, what was it here? It's listed here like $1 billion+ on buy here, $1.1 billion to repurchase shares during that quarter alone.
Apple didn't help, but I think they're into transportation. What railroad do they own? It's driving me nuts. Do you know off the top of your head? I know they own a big railroad. I can't remember what it is.
I think it's Norfolk Southern.
Yeah, that's probably not helping. And banks.
Yeah, Bank of America did. Yeah.
Yeah.
There you go.
So I haven't had much of a chance to look into that. So this is mostly unrealized losses, right? Not operational.
Okay.
Yeah,
I don't know. You caught me off guard with that one. You caught me off guard.
I've been too busy this weekend to look into. They just reported yesterday because they do it on Saturdays because Warren likes to let the market digest the news before Monday. So, but I mean, we can follow up on this next week just to see. It most likely will not change my position on holding Berkshire Hathaway until I'm dead.
So they had operating earnings of 10 million versus 7 million. The net loss per average equivalent of Class A share of $8,824. The net loss was from investments and derivatives. 23 million versus 10 million loss is what was expected. Yeah.
Okay.
Yeah, and their insurance float increased as well. So I mean, there's some numbers there to chew on as you get ready for the Monday Open.
Which that's a big deal for them too, because they own a decent amount of insurance, and that's actually where a lot of their cash that they get coming in comes from.
That probably is more where they took their loss on.
Yeah.
There you go. I still believe in them, so if they go down, it'll be a good opportunity to get in.
I agree. I agree.
Final thoughts, Brandon. Take us away. Final thoughts.
The Cowboys are playing right now, so I can't wait to get to see them in the living room there. But I'm also really nervous about it because they're playing the Eagles, and even though I completely dislike the Eagles, very good team, very good team. Jalen Hurts, very good quarterback. I'm worried about that. So I guess I'd be short on the Cowboys right now if they were a stock, and I hate saying that. Hate it. But anyways. What can I say about stocks, Dave, that we haven't already said? Apple, I think is still a good buy, and I think that they'll find a way to pull forward.
There you go. There you go. Remember the 5th of November. Happy Guy Fawkes Day. Again, if you want Brandon and I to mentor you on your finances to help you out, let us know. We could do it. If too many people reach out to us, we won't be able to help everybody. So first come, first serve. So be first on the list there, and we'll see what we can do to help guide you. I do this all the time. I help people. And my goal when I turned 40 was to make 100 people new millionaires by the time I turned 50. So that was my goal I set for myself. So I am trying to achieve that goal. See how many people I can help. This podcast is one way I do that. Looking forward to the week. A lot of big news this past week with the Fed coming out, not raising rates, not really being too dovish, kind of maintaining that dovish, hawkish middle balance there. And then the jobs numbers, unemployment ticking higher. A lot of people said that was just due to strikes. We'll see how that goes. I know there's going to be a big jump in ad revenue next year, just because it's a very heated political season. And so Meta is going to be a good one to look forward to. Look forward on a drop down because as an opportunity to buy, because we are going to see some drops down here soon. Last week I said that this was a correction that we were in. Then once we hit that full correction level, we would jump right back up. It is starting to do that, but it's not going back up as strong as I would have hoped. So I'm very cautious right now going in there. Tesla jumped off its bottoms. It went down to 196 at one point, and now it went back up to 220. I believe the last time I saw it, so I'm very happy with that move back up. I bought my last piece of the cash I allocated to buy into Tesla. I purchased it this past week, so my cost basis is a good amount, but I'm still currently at a net loss on that. But I'm hoping to hold, and it's going to move up. That's all I got, man.
That's all I got too.
All right, guys. So as always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.